What's wrong with the monolithic app structure? Why microservice architecture has become the new golden standard for fintech businesses? Hi, I'm Arina, a fintech expert at Modsen, and in this video we will dig deep into the intricacies of microservices for finance businesses. So, let's get right into it. For starters, what are microservices exactly? Okay, imagine a restaurant offering a variety of dishes on the menu. To prepare each dish, the restaurant's kitchen is divided into several stations, each focusing solely on a specific part of the meal. Stations work independently, but communicate with each other to deliver a complete dining experience to the customer. If one station encounters an issue, say running out of the ingredient, it does not affect the operations of other stations and the kitchen overall. Each microservice is like a separate kitchen station, handling a specific function or business capability independently. Their autonomy allows microservices to be developed, deployed, fixed, and scaled independently to ensure applications' resilience. At the same time, microservices communicate with each other through APIs to ensure that the final product operates seamlessly. Food allegories are surely great, but what about the concept of microservices in finance? Here are the key ones you need to understand. Breaking down the monoliths. Traditional financial applications are usually very rigid and indivisible systems where all functionalities are closely intertwined. So, microservices allow developers to break these monoliths into smaller independent services, each responsible for a specific business function, like account management, fraud detection, or process transaction. Saving isolation. In finance, service isolation within an app gains extra importance as it reduces the risk of a system-wide failures resulting from a single bug. Communication despite language differences. Different services within a fintech app might require different development approaches. For instance, Python is great for building payment gateway services, Java is preferable for account management, and investment portfolio service runs excellently on Node.js. So, APIs enable the services to interact seamlessly, even if they're written in different programming languages. And now to the juiciest part. According to the latest available data, 90% of businesses worldwide are embracing microservices, reporting 60% productivity increase, 20% annual revenue growth, and 30% greater customer retention compared to their pre-microservices era. But you may ask, how exactly service-oriented architecture makes such spikes possible? Actually, there is a number of key factors, and they are scalability, speed, reliability, security, innovation, flexibility, and budget efficiency. Scalability. Businesses can scale specific services independently based on market demands and peak load times, rather than investing heavily in scaling an entire monolithic application. Speed. Instead of building an app progressively, development teams work on different services simultaneously, accelerating the cycle and allowing businesses to quickly adapt to industry changes. Reliability. If one microservice fails, the system will remain resilient, ensuring the minimal disruption to the customers. Security. Each service can have its own security policies, reducing the risk of a single point of failure. Innovation. For the previous reason, microservices allow to experiment with new technologies and services with minimal risk, without disrupting core operations. Flexibility. By building a service-oriented architecture, IT teams can choose different tools that work best for each individual service, optimizing performance and cutting development costs. Budget efficiency. Based on all the mentioned factors, microservices significantly reduce the cost associated with maintaining previously idle finance app infrastructures. Looks like a dream, right? Yet, nothing comes without a challenge. So, here are a few obstacles Modsen team has navigated while helping fintech businesses switch to microservices lines. Firstly, handling data consistency across multiple microservices calls for careful planning and data management strategy implementation. Secondly, smooth interactions between microservices built by using different languages and technologies demand standardized APIs and thorough testing protocols. Thirdly, maintaining strong security measures across multiple microservices in the fintech sector while complying with strict regulations requires constant monitoring and updates. And for the fourth point, efficient DevOps practices and automation tools are essential to manage the deployment, monitoring, and scaling of numerous microservices without adding operational overhead. Microservices isn't the easiest change you can make to secure your fintech business success, but its benefits are unmatched. From enhanced scalability to improved resilience, microservices will transform your fintech operations to the core. With a reliable IT partner guiding you through the complexities, you will not only navigate this obstacle safely, but unlock new levels of business efficiency. Thanks for tuning in. If you found this video helpful, please give it a thumbs up and hit the subscribe button for more tech insight. And remember, with Modsen by your side, the possibilities for your business are endless. I'm Arina. See you in the next video.